This is More Knowledge, More Wealth with your host, Gabriel Shahin. Gabriel is a certified financial planner and a registered investment advisor at Falcon Wealth Planning. This show does not intend to provide personalized investment advice through this broadcast and does not represent that the services or securities discussed are suitable for any investor. Investors are advised not to rely on any information contained in the broadcast in the process of making a full informed investment decision. Now here's your host, Gabriel Shahin.
Good day, this is Gabriel Shahin, certified financial planner and your host of More Knowledge, More Wealth here on every weekend, talking about all important topics of personal finance. My job is to go over the knowledge you need to increase your wealth. Now, to the listener, you can always reach out to myself or any one of my colleagues here at Falcon Wealth Planning. Our phone number is 855-963-2526. That's 855-96-FALCON, like the bird. Or visit our website at falconwealthplanning.com. That's falconwp.com for short, where you can go on our Knowledge Center and get so many great topics on our YouTube channel. And those topics are provided by you. You send requests to radio@falconwp.com. That is radio@falconwp.com. And you can also get this episode or any one of our previous episodes on podcasts and Spotify and you name it. Whew, that's a mouthful. Now, I'm the president of Falcon Wealth Planning. We are a fee-only, non-commissioned, true fiduciary, folks. We go over all important topics of personal finance. It could be something as simple as where you are today, how retirement looks like. Talk about investments, taxes, estate planning, insurance, folks, you name it. Anything that involves a dollar sign, we can help you with. And we're offering 1 to 2 meetings, 1 to 2 hours of our time, folks, at no cost. It doesn't matter where you're located. We've got offices all over. We would love to help. Our phone number is 855-963-2526. That's 855-96-FALCON, like the bird, where we can help relate this show to your specific situation. So a lot to go over today. We had this article that come through. I had one of the listeners send this in. It was quite interesting. It was a Forbes article, and it was talking about which of these 12 tax dodges will be taken away. It's funny, you start looking into this article and they're not talking about anything that has to do with tax dodges. They're talking about proposals of what happens after 2025. Now, let's take a big step back. What are you talking about, 2025? Folks, do you know the current tax law, the current tax rates that you've been enjoying since 2018, you know that's only good until 2026? Come 2025, that is the last year you will be able to take advantage of these tax rules, these tax laws, these tax benefits. So I'm just looking at this article. I thought it's like, oh, I know what these are, right? This is my world. This is where we help multiple people, multiple clients with their situation to take advantage of them today and put themselves in position to get the financial benefits after the tax law changes. So I'm reading this thinking, I'm curious if they're going to highlight what we help our clients with every time. And they're not. They're not doing any of it. They're talking about step up in cost basis, Roth conversion, low rates. None of this changes when the proposal is over. It makes no sense at all. So I thought, let's do this. I thought I put a social media post out there and it did really well. We had thousands of people that reacted to this, which was really cool. So I wrote this. I said, and I'm going to go over this with you guys, the 10 biggest changes that you should address before it's too late. Okay, this is the 2017 tax cuts. So I'm going to go over with you these 10 and not just go over with it, just read a list down, right? I could easily do that. You know me, I talk fast, but I'm going to go and explain which each and every one of those are and how and why you should be taking advantage of it. Because what I see is people just don't really know, right? You don't know what you don't know, but you don't understand the benefits of it. You hear some of the changes that are going to happen, but how does it relate to you? Like truly you. How are you going to turn that into money in your pocket? What should you be doing? So let's go over the top 10 changes. Now, the first one, a lot of people, by the way, don't even know this. A lot of our clients, we actually walk them down their tax return. It's crazy. They could be some of the most sophisticated people out there, and nobody has ever walked them through their tax return. I don't care if you're doing it through your TurboTax or whatever it is, or you have a tax professional that you're paying thousands of dollars to. They give it to you, but they don't actually walk you through line by line. You know why? Because you got a tax preparer. All you care about is, do I owe any money? I get it. But there is so much more important items on your tax return that once you understand it, will save you thousands, tens of thousands, hell, hundreds of thousands of dollars. So the first big item that is important that you probably didn't even know about, but just follow me here, is in 2017, we used to have an exemption. Right? What is that? So we always had these standard deductions, which I'll talk about a little bit later, but we had these exemptions. The government is so nice. They're the nicest people in the world, right? We love the government. They gave us a free $4,000 exemption per person. You're married, $8,000. You have kid, $12,000. 2 kids, $16,000. You get where I'm going with this, right? So you get free write-offs of $4,000. So when you were back in 2017, you were enjoying those benefits. Come 2018, those went away. People were pissed. Well, now they're coming back in 2026. So that's something just kind of good to know. You get a free write-off coming back. And oh, by the way, that $4,000 was back in 2017. For all I know, it could be $5,000 or $6,000 now because of inflation. Everything always gets inflation adjusted. To be specific, it was $4,050 was the write-off. Before that was $3,950, so on and so forth. I just say 4,000 because it's easy numbers. So yet again, this comes back. Be on the lookout. These tax rates that are going to end up going back up, which I'll talk about in a little bit, there are some pros that come back. Number 2, here's a negative. Because the IRS took away the exemptions, what they did to be nice, because remember, the IRS is so nice, they ended up doubling the exemption amount. Or excuse me, the standard deduction amount. The standard deduction for single was about $6,400. And double it was $12,800 if you were married. So the standard deduction, that's what it used to be. Well, in 2018, they doubled it. So the $6,400 went to $14,000, and the $12,700 went to $29,000. That's inflation adjusted. My point, because I hate just rattling numbers off, folks, is it's going to get cut in half. Your standard deduction gets cut in half, which means itemization is a little bit better now. So you have to start looking to itemize again. This is something that needs to be planned for, because some people just stopped taking into account how much they give to charity. They stopped taking into account how much they spend in medical. They stopped caring about reporting how much their property taxes, sales taxes, car registration, because of the SALT limitation. That was unneeded because they capped it at $10,000. Well, hell, a property tax alone could be $10,000. You make $100,000 a year, you're probably paying $8,000 to the state of California, if that's where you live. So the idea with this is a lot of people, they said a lot of blue states ignored it, really screwed them over. That's only 2, by the way, folks. By the way, if you're just joining me, you're listening to Gabriel Shahin, Certified Financial Planner, and your host of More Knowledge, More Wealth here on every weekend, talking about all important topics of personal finance. And today we're just going over what's going to happen come 2026. By the way, it's like right around the corner. It's like 18 months from now, depending on when you're listening to this podcast. End of 2025. We're in the middle of 2024. Let's talk about alternative tax. This is number 3. It comes back. Now, I say that with an asterisk. Why? Because it's always been around, but what used to be like kicking in at $160,000 of AGI, what used to kick in the 28% bracket, which, oh, by the way, is 24 now, what used to kick in, they moved those rates to $500,000 or $100,000 if you're married. So it substantially went higher. Most people did not, it did not affect them. Well, now it's going to revert back in 2026 where it will, when it's kicking in, oh, by the way, the 24, which will be 28% bracket, that's a big deal. So more people are going to have this come into effect, and that's important because that's an effective rate of roughly 35%. Yeah. So you literally think you're at 24, or which will be 28, and boom, you jump up to 35. That's a big deal, and you still have to pay federal or state taxes, and there's other supplemental taxes as well. Let's continue, because remember, we're on number 4. Now, here's something people, yet again, just don't know because it's never explained to them. But you used to be able to write off up to $1 million in mortgage interest. Now, you would have to buy the house from 2018 onward, right? So you were grandfathered in. If you had a mortgage of $1 million, by the way, that's a balance. Your house could be worth $10 million. But if the balance on the mortgage is $1 million, you're able to write off that full $1 million. So, but if you bought a house in 2019, 20, 21, 22, whatever, then you weren't able to write off $1 million. You could only write off $750,000. It's crazy because home prices just went up. They skyrocketed. Like in Southern California and a lot of places in the country, like having a mortgage over $750,000 is not crazy. You're not living in what you would expect to be an amazing, beautiful mansion. So that is coming back. Come 2026, you're able to now write off $1 million. That's important when you're trying to qualify of when to buy a house, how much to spend. What are the tax benefits of owning that house? Some people think it's expensive to own a house versus renting, and that's true. The index, the affordability index, it's cheaper to rent than to own. But that could change depending on the home you're trying to buy, the rates that you're going to get, and more importantly, what you're allowed to write off. So that comes back. And by the way, there's other rules to this. You could still write off even today, even though you can only write off up to $750,000 in mortgage balance, you still could do $100,000 on a home equity line of credit, assuming you did that on home improvements. And oh, by the way, that is the same thing. If it was $1 million pre-2018, it's technically $1.1 million if you had that home equity line of credit. So that was number 4. Number 5, I kind of just alluded to this, was that SALT limitation. Now, there's like some complexity to this because here's the thing. The itemized deduction, which I'll even kind of try to show on my screen for those who are on the video cast through YouTube. The itemized deduction, right? It really comes in 4 parts. You have the medical, which you don't get to write off the whole thing. It's just a percentage of your adjusted gross income. Anything over that, you could write off. That's 7.5%. Then you have like taxes, whether you pay to the state. Well, if you're in like Florida, Texas, Nevada, wherever that doesn't have a state tax, then it's your sales tax. Yet again, people don't know about that. Number 3 is your mortgage interest. We just kind of talked about that. Number 4 is charity. Now, after 2026 and also or after 2025, starting in 2026, will be very similar to how it always has been prior to 2018. Now you can write off unreimbursed expenses. So you're able to write off those in the calculations, percentage of AGI, but that is now a new one that you're able to write off. But the point is when you look at the SALT limitation, that is sometimes people's biggest write-off because of the property tax and what they pay in state taxes, right? Wealthy people pay a lot of taxes, so it is their biggest write-off. Right now, if you live in a $2 million house in Los Angeles, you're paying $24,000 a year in property tax, assuming you just bought the home. If you make $500,000, you're paying probably $40,000 to the state of California. Just those 2 items, forget car registration, is about $65,000 a year, which, oh, by the way, came 2018, you only get to write off $10,000. So you lost $55,000 in write-offs. Depending on your tax bracket, you lose $20,000 in tax savings. Just like that. Hopefully that snap was caught on my microphone. You get what I'm saying? The professional term for that, folks, is annoying. You get what I'm saying? So now, here's where it gets a bit complicated. The irony of what I just said, by the way, is that people were most likely never even getting those write-offs before because of AMT, alternative minimum tax. What is that, by the way? It's a separate tax system that the government implemented in the 50s because 4 billionaires weren't paying any taxes. They're kind of taking advantage of the system. So they have a separate system for that. Where am I going with this? Is that SALT limitation expires come 2025. So come, yet again, this whole theme is 2026. You're able to get that write-off back. So it's unlimited. It's uncapped. They do not cap the $10,000. Yet again, these are all crucial points, folks. And what I'm going to do, because that's just the first 5. Now, there will be some repetitiveness on the second 5 that I go over, but we're going to take a quick break. And folks, if you want help with this, if you want this to relate to your situation, give us a call. We're more than happy to do that for you. Our phone number is 855-963-2526. That's 855-96-FALCON, like the bird. Or visit our website at falconwealthplanning.com. That is falconwp.com for short, where we can take a look at your situation and analyze to see which one of these top 10, there's more, by the way, but these are the top 10 that is beneficial for you. So maybe it's something that you can delay in your strategy session, or it's something that you should take advantage of now. Depending on your situation is why that is relevant. Folks, we're going to go on a quick break. We'll be right back after a few words. This is Gabriel Shahin, Certified Financial Planner, your host of More Knowledge, More Wealth. That's on every weekend. We're going over all important topics of personal finance. We're going over retirement planning, making sure you're prepared for retirement, Social Security and strategies, real estate, taxes, avoiding them now and in the future, investments, reducing fees, commissions, and so on, insurance, and estate planning. Folks, we are offering a free financial assessment that you could take advantage of. We have offices all across Southern California, including the Inland Empire. Give us a call to take advantage. Our phone number is 855-963-2526. That's 855-96-FALCON, like the bird, or visit our website, falconwealthplanning.com. That's falconwp.com for short. Enjoy the show. We look forward to serving you. Welcome back, folks. This is Gabriel Shahin, Certified Financial Planner, your host of More Knowledge, More Wealth, here on every weekend. And here we're just talking about the top 10 biggest changes that are going to be coming in 2026 when the 2017 tax cuts happen. So we went over the first 5. I'm going to go quickly over the first 5, and then we're going to go over the next 5. So these are just the top 10, okay? First one, exemptions come back. That's a big deal. It's a free write-off that the government gives back. Standard deductions gets cut in half. That's a little annoying for most. AMT taxes come back. That's very annoying for a lot of people. Mortgage balances come back where instead of being able to only write off $750,000, it's $1 million. That's better, especially as home prices are skyrocketing. And then, of course, the SALT limitation that we were told about a lot of the $10,000 is the max you could write off in taxes goes away. So those are the top 5. Now let's focus on the next 5. Number 6, and this number 6 is important, folks. I can't stress this enough, especially for our wealthy people out there. And so the estate taxes. Estate, not state taxes, whether it's California, Arizona, New York, wherever. Estate taxes. Your allowable estate. The government says you're allowed to have today, let's just say for simple numbers, $12 million. If you have over $12 million, you work too hard and have too much, we want it, is what the government says. They take roughly, we'll call it half. It's 40% on the federal level. Certain states have their own tax. So you're allowed to have 12. By the way, if you're married, that's 24 million. So the government's saying 24 is enough for you. Anything more than that, you have to give us 40%. Okay? So let's say you're married. You have 24 million was what you're allowed to have. Let's say your net worth is 124 million. Okay? Well, that's 100 million over than what the government says you're allowed to have. Well, they'll tax you 40% on it. $40 million your heirs, your estate, is going to have to pay. Well, what if your business is tied up in like real estate? What if it's tied up in an actual business? Your assets, are actual in-business assets. Let's say the owners of, I don't know, Costco. Let's say the owner of the New York Knicks, the Los Angeles Lakers. Like, are they going to have, theirs is worth, let's say, $5 billion. Let's say $5 billion and 24 million, right? Because that's free. So that $5 billion, that's 40%? Guys, that's $2 billion. Do you think they have $2 billion just sitting in their bank account ready to write a check to the government? That's a big deal. Now, we don't really care about billionaires. We care about you. This matters and affects a lot of people. And what happens comes 2026, that 12 billion, or that would be nice, that 12 million gets cut in half. It's now 6 million per person. If you're married, it's 12. It's not 24, it's 12. That's extremely important because, like, I'll just speak for people here in Southern California, it's not uncommon to have a $1 to $2 million house. People who do really well, God willing, they can have multiple millions on top of that. Now, that's not a big deal, but I'm talking about people in their 60s today. What do you think that'll be at 90? Should hopefully double every 10 years. So if their net worth is 5 million today, in 10 years is 10, in another 10 years is 20, in another 10 years it's 40. They're going to have an estate problem. What can you do today to lock in that estate planning exemption? Because if you take advantage of it today, you have to file a Form 709, and you have to say that I absorbed part of my lifetime exclusion. Well, your lifetime exclusion today is 12 million. It will be 6. You should be planning this. This is huge. It doesn't have to be for people who just has an 8-figure net worth. The question is if you're gonna, if you'll ever get there, is if you have $1 million today and you're under the age of 65, it may be a question of when you're gonna get there. Especially if you don't do enough planning, especially when your spouse, if, God forbid, your spouse passes away. Most people don't file a 706 estate tax form to take advantage of their exemption. Folks, I've seen this happen so many times. This is why we're offering the free financial assessment, because there's something that probably just strikes your mind that could be of value to you. We're offering 1 to 2 meetings, 1 to 2 hours of no cost, folks, where we can help relate the show to your specific situation. Folks, our phone number is 855-963-2526. That's 855-96-FALCON, like the bird, or visit our website at falconwealthplanning.com. That's falconwp.com for short. where we can help answer these questions for you. So let's continue. Number 7, we kind of highlighted this already. This is unreimbursed work expenses. So that could be like your union dues. That could be your uniform, right? Police officers, they have uniforms. They have to dry clean those things. They were able to write it off. It's kind of sad because when this whole tax reform happened, starting in 2018, there was nothing to write off. They had no longer write-offs to do. It's quite sad. Some of our helpers, our first responders, no longer was able to do this. It comes back. It's like 2% of your AGI. Anything over that, you get to write off. But the point is they spend thousands of dollars to do that. So unreimbursed work expenses do in fact come back. In addition to that, in that same category of, oh, by the way, your itemized deductions is your professional fees. We talked about that. So what are professional fees? They come back. That's what you pay your accountant. That's what you pay your financial advisor. That could be what you pay an attorney. These are professional fees that you pay that you're now able to write off again. That's a big, big deal for a lot of people. So that could be tens of thousands of dollars. Some of these professionals out there could be like hundreds of thousands of dollars. So that is number 8. Number 9, this is a big one, is QBI, Qualified Business Income. This is huge because for business owners, you're able to write off 20% of your net profits, depending on your business and how much you make. But the point is, if you have $100,000, the government would only tax you on $80,000. They give you 20% of that. You literally see 20% write-off, $20,000. You see that $20,000. It's really, really cool, folks. It's something that a lot of people don't understand and take advantage of. This is why sometimes they overpay themselves salary. They're taking advantage of wrong retirement accounts where they're getting employer versus employee contributions. They're paying unnecessary self-employment tax. It's just all messed up. Why? Because you have an accountant that is setting up an account that you had decades ago. They're setting up maybe a SEP versus a solo 401k. Or they're taking a look at your situation and writing it off not as a profit sharing, but as an IRA above the line deduction. Now, that's a lot of jargon there, folks, but that little difference could save you thousands, potentially tens of thousands of dollars. And I see it happen all far too often. Yet again, if you're meeting with your accountant once or twice a year, God bless you. But that's a tax preparer, not a tax planner. You're meeting with your accountant earlier in the year, let's say early 2024, not for now, it's for last year. A lot of these strategies, I'm telling you, have to be done by the end of the year. So I just don't understand it, right? So, and you're a financial advisor, what do they tell you? Oh, I'm sorry, we can't give financial advice, or excuse me, tax advice. You have to, it rolls off the tongue, because I used to have to say it prior to starting Falcon Wealth Planning. Please consult with the tax advisor. Well, hell, your tax professional is not a tax advisor. So you can't talk to them, you can't talk to your financial advisor, and they're not even a financial anything. The biggest piece of financial information to your name is your tax return. They're not even looking at that. So hell, they're an investment advisor, investment consultant, whatever makes them happy. You know what they normally call themselves? A vice president. I'm a VP of nothing. Our industry doesn't regulate what they call themselves. Who cares what they call themselves? But they're not helping you in your situation. Can be extremely important depending on your tax situation. You could sell an investment and pay no taxes. Did you know that? Depending on your situation, I've seen prospects who became clients that ended up deferring into an account when they had a net operating loss and they had zero taxable income. So they're deferring, getting no tax benefit, only to take it out and pay tax. You get what I'm saying? It's annoying. I've seen people save, like I said, in traditional, they could be saving into a Roth. They could be purposely selling something tax-free. They could be converting into a Roth. Insane to me. Quite frankly, annoying. And I see it all far too often. This all started what? From a conversation at QBI? Yeah, it's all about saving you money. Yeah, you're paying your advisor. Let's say you're paying them 1%. Oh, that's way too much. On $1 million, that's $10,000. Hell, I don't care if you get $5 million and you're still paying 1%. That's $50,000. Some of these tax strategies, I'm talking about single year savings of 75 grand, 100 grand. Millions of dollars throughout your working career, and you're talking about, you can't afford to be cheap. Can't. Because you know what? You think it's expensive to hire a professional? Try doing it on your own as an amateur. You'll see what expensive is. Frustrating. Finally, last one, sucked my mojo out of this conversation, is Tax brackets, current brackets are 10%, 12%, 22, 24, 32, 35, and the 37% bracket. That's what they currently are. Now the 10 stays the same, but the 12 jumps to 15. Now you might be like, it's only 3%. That's a 3% increase on 12. Well, what's 3 divided by 12? That's 25%. The tax bracket just went up 25% come 2026. The 22% bracket today will be 25. The 24 becomes 28. And oh, by the way, in that 28% bracket, that's when AMT kicks in, as we just discussed. The 32 goes to 33, and the top bracket of 37 goes up to almost 40. 39.6. Can I just say 40? Taxes are going up. What are you doing about it? Most people aren't doing anything. They just complain. I get it. What are you supposed to do? Well, listen, what you're supposed to do, I'm sorry, this isn't the selfless plug here. I'm bringing things to your attention. This is where you call and reach out as we're offering a free financial assessment. There's a reason we're giving a couple meetings, a couple hours of our time, folks, at no cost. Give us a call. We would love to help. We know the stuff inside and out. Our phone number is 855-963-2526. That's 855-96-FALCON, like the bird. Or visit our website at falconwealthplanning.com. That's falconwp.com for short. You can put an inquiry right there on the website, answer some questions, and we can make sure to answer those questions that you have to see if any one of these 10 biggest. There's still some small things that can save you money. There's still some very small things that, by the way, relate to 1% of you that haven't got a bunch of money that can save you even more. But don't say you don't have time for it. We got offices all over. We can help meet with you virtually as well. But the idea is there's so much to know, so much to do. And oh, by the way, it changes. It changed from 2017 to 18. Now it changes again from 2025 to 2026. And you know when the best time to do it is? Now. You know when the best time to do it is? Yesterday. But if you think, I still got a year and a half to do this, or less than a year, or whatever the case is, depending on when you're listening to this, well, that's where you're wrong. Because if you think you're going to wait till that 11th hour, you're in trouble. It's going to cost you twice as much, right? Supply and demand. Everybody's going to be busy. Arguably 3 to 4 times as much if you think you're going to come in November and do all these implementations to save tens of thousands, if not hundreds of thousands of dollars to 11th hour. You're crazy. We call that procrastination. If the procrastination is happening on this type of planning, it's happening on everything else, whether it's tax planning, budgeting, investments, insurance, you name it. Just with those 4 things I just listed could save you thousands of dollars on an annual basis, folks. Let us help. We'd love to do it. Our phone number is 855-963-2526. That's 855-96-FALCON, like the bird. Folks, that was a fast show. I want to thank you for tuning in with me this weekend. Feel free to reach out to myself or any one of my colleagues here at Falcon Wealth Planning. Our phone number is 855-963-2526. That's 855-96-FALCON, like the bird. Or visit our website at falconwealthplanning.com. That's falconwp.com for short. And you can visit our knowledge center there. We have so many great videos, almost 1 million views on there. And you could be able to get the answers to the questions that you have. I built that content because of what you wanted to learn. And if you want us to answer your question on air, or if you wanted us to post a video on the answer, on the question you may have, send it to radio@falconwp.com. That is radio@falconwp.com. And if you want this episode, any one of our previous episodes, you got Spotify, podcast, iHeartRadio, you name it, folks. Whatever it is, go ahead and pull it on there and enjoy. Folks, I want you to have a fantastic weekend. I want you to have a great week, and God bless.